Many denied that this day would come, and yet here we are. You came here for the truth. Today we are going to look at what's happening, specifically number one, with the eviction moratoriums ending. By the time you watch this video, who knows what's going on with the government and any new rules and regulations they put in place. But as of right now, that's what's happening. Number two, we're going to look at the debt ceiling. This is coming up as well. And number three, infrastructure, specifically with the infrastructure bill. All three of these things are interconnected. I'm going to show you everything you need to know. So stick with me till the end. Let's go. First things first, let's talk about the eviction moratorium. You could see right here out of France 24, millions of Americans at risk of eviction as moratorium expires. If we look specifically here, I pulled it up. You're seeing the US government ban on residential evictions expired at midnight on Saturday, putting millions of American renters at risk of being forced from their homes. You got to understand, it doesn't just happen overnight. It's not as if this goes into place and suddenly everybody's out on the street. It has to make it through the courts. There's a time delay and so on, but this is what's happening today. Now the government, by the time you're watching the video, as I said, you might be already seeing changes that are occurring. But at the time of this recording, that is what is going on. On Friday, the U.S. House of Representatives adjourned without reviewing the tenant protections after it was blocked in a bid to extend it by unanimous consent until October 18th. So we're going to see what happens. They need the votes. Maybe they could push this and see what happens. Okay. But more than 15, I thought this was crazy. More than 15 million people in 6.5 million US households are currently behind on their rental payments. Check this out. Collectively owing more than $20 billion to landlords. This is very serious. Now, maybe some people will be able to pay that back, but not everybody. And that shows you that the landlords, the actual lenders, for them, nobody's getting paid all along the line. So this cannot persist forever. Something has to give. So we'll see. Definitely we'll see what happens, all right? I don't know how this is going to all end. Personally, I think they'll extend it in some way or they'll give stimulus checks to make up for it. But as of right now, this has officially ended. So we'll see. A tsunami of deferred debt is about to hit homeowners no longer protected by a foreclosure moratorium. Only 1 week after New Orleans enacted a citywide stay-at-home order in March 2020, this particular person was put out of work. Before she could recover, she was furloughed from her job as a nail technician and hotel employee. Essentially, she found this forbearance provision that allowed those federally backed mortgages facing hardship to defer their monthly payments. She took the opportunity, but now she owes $20,000. And see, you have this here. They're mentioning the stats, but I just want to talk about it very quickly because you look at what has happened with all these people. All of that money has basically been backed up. Okay. Now what's going to occur? For some people, they were able to put this on the end of their mortgage. So I didn't pay for a year, let's say, and now that goes to the end of the mortgage. All right. So the bank could basically take a hit in 2020, let's say, and then they push that out a year further. At least they get the money coming in. But who knows what's going to happen? Some of these people, they just may not be able to pay their rent. They just may not be able to pay their mortgage. Landry is about one of about 1.8 million homeowners still in forbearance as the safety net is removed. About a fifth of them will not be able to extend their forbearance past September, and 1.5 million more are at least 3 months behind on their mortgage without the protection of a forbearance plan. There are more stats in here, more details in this article if you're interested. I just found it amazing to see how big the numbers really are and how much of an impact this will have on the economy if this actually does happen. You start to see a bunch of people getting evicted. I had a comment on my channel talking about how right now this one individual was seeing people putting a whole bunch of stuff in storage lockers, and that could be the case for a lot of people. They're ready to get booted out, so all their stuff is being moved in to the storage lockers. If anybody has any of that anecdotal evidence, please post it in the comment section. I will definitely be highlighting your comments. I will definitely be replying to your comments. So please let me know, but also everybody else. Missed debt ceiling deadline kicks off high stakes fight. So you're seeing this also going on with the government as well. We get this all the time, every single time. The debt ceiling simply gets raised. We know that it's going to get raised, but what's going to happen in the meantime? We don't know the back and forth. But there are more details in here if you want to check it out. Obviously, I don't have time to cover it all, but check this out. Schumer announces bipartisan group has finalized legislative text on the infrastructure bill. All right. Infrastructure bill. You heard that, right? Okay. We're not done yet. Hold on. After hours of last-minute additions and edits, the bipartisan group of senators has finished writing the text on the infrastructure bill, and in a moment, I'll take the procedural steps to make their legislative language the base of the bill here on the floor. Great. All right. They're saying that it's going to move through, not going to be a problem. This is essentially, look at it. I'm a little tongue-tied here because I want to show you. I really want to show you this. It's coming up in just a second, okay? More than half of the bill, $550 billion, includes new federal funding to be spent over 5 years. It invests $73 billion to rebuild the electrical grid, $66 billion in passenger and freight rail, $65 billion to expand broadband internet access, $55 billion for water, $40 billion bridges, $39 billion for public transit. Okay, it goes on. All right. Apparently it's not sufficient. This is why the bill passes. They're going to push it through with a budget resolution to allow the Senate to make further historic vitality important themselves. We know this has been a long, sometimes difficult process, but we are proud to announce it. What's in the bill? Well, the people who have to sign this bill. Let me show you this. Here it is, by the way. Okay. Let me read this to you. Senate Majority Leader Chuck Schumer announced on Sunday the finalization of the legislative text of the bipartisan infrastructure bill, which is more than 2,000 pages. Let me tell you something. Nobody's reading that bill before they sign it. There are things in this bill that have nothing to do with infrastructure. There are things in this bill that are going to misuse the money that is your tax dollars. And there are things in this bill that we won't find out about for a very, very long time. I understand completely and entirely understand that the word infrastructure is being used here. And you look at the titles. If you can read this, I know the font is probably pretty small. But I assure you, as we have seen in every 100% of cases, your money gets squandered. And that is a simple matter of fact. Number one, the eviction moratoriums are ending, but the government is racing to reverse it. Number two, let's be real here. This shows us the dependence on the government and the stimulus and the quantitative easing and the easy monetary policies that are in place today. Number three, I think it's really important for investors today to readjust their portfolios to account for increased risk and fragility. This is really key more now than ever before. Take a look at this chart right here, and you will see something very, very obvious. This is the personal savings, and you look at it during this period of years, you're just seeing it sort of flatlined around $1,000. Now, we make it into 2020, and suddenly it surges up. Why? Why was this happening? Because there was all sorts of different stimulus that were coming through the system, and suddenly people had a lot of cash sitting around. Then it dropped down significantly as we made it through into the second half of 2020. But then it surges up again. What's going on? What could it be? These, and then by the way, heads down again. These are the stimulus coming through and then drying up, coming through and then drying up. That's the personal savings. But if you understand the connection in between the growth that's happening and the stimulus, it is very clear. Bear in mind, I am not talking about the stock market. This is very clear. To me, the economy, the stock market, these are two different things, even though the vast majority of the amateur retail investors, they haven't really understood the difference there. They've been using those terms and just convoluting the message. But anyway, aid programs spur a record drop in poverty. And essentially, they're just showing here this particular individual and her circumstances where she was given a large sum of money and it helped her pay the bills and so on when she lost her job. But it shows you how dependent people have become, for better or for worse, or whatever you want to call it, on the government stimulus. What happens when that stimulus goes away? This is not something that can go on forever, right? People need to be working. That's the primary goal. And the Federal Reserve, what they have done is actually weaken that. They have taken away from that. It is a known fact that if you pump out their quantitative easing and have super low interest rates, it actually exacerbates the wealth gap. It creates inequality. That has been documented over and over again, and little tidbits of that have actually been acknowledged by people in the Federal Reserve, and yet they do it anyway. Why? Because they love it. They are all for it. Now you're looking at what's been happening with all different types of assets and liabilities recently, and shortages and supply chain problems and so on. This is one that I had brought out earlier, but it's going to lead me into another point. I want to make this very clear that used car prices have probably peaked, but new car prices will likely increase further in the near term. This comes out of Goldman Sachs. I wanted to make that clear. You could see right now, based on the Manheim auction prices, just showing you the fact that these have surged up to a point, have now come down a bit. Who knows? Who knows where we'll be? This is what Goldman Sachs is pulling up. Well, they pulled that data from a couple sources. But anyway, just giving you an idea, okay? Home buyers turn to baby boomer parents to help with purchases. This is going on all over the place because younger individuals, they can't afford it. And if you understand, I did an interview with Steve Saretsky out of Vancouver, real estate agent. He's got his own Saretsky report. He said specifically, nobody's buying a house on their own salary. They're not qualifying on their own salary. Their parents are helping them. They got money from overseas helping them. Somebody's helping, but nobody can afford it. And that just shows you how unbelievable things have become. Is there a liquor shortage looming in your state? This one could be big. We'll see. And essentially the quote was something like, I can't find it right now, but it was something like, we've never seen it like this before. How many times have we heard that recently? Look, stocks, they have seasonality to them. And same with real estate. August, median monthly flow into equity mutual funds and ETFs as a percentage of the total assets under management from 96 to 2019. August tends to be a very weak month. It doesn't mean it's going to crash. It doesn't mean it's going to collapse. But it certainly shows you money flowing, is generally negative. Now, in addition to that, we also see the same with real estate. July, August tend to be weaker, and then we move into September and beyond, and it starts to get a little bit stronger. I thought this was funny. Anti-ARC ETF to bet against Cathie Wood's flagship fund. Cathie, nobody knew who I was 2 years ago. Wood is actually popular enough to have an anti-Cathie Wood's ETF. It's called SARK, S-A-R-K, which I find interesting anyway. This right here is just something I wanted to bring to you because I always like to show you what's happening with robotics and automation. And you can see the University of Maryland engineers having 3D printed a soft robotic hand that can play Nintendo. Pretty interesting. If you want to see, it's a very short clip, just gives you an idea, and it's kind of like smooth. The operation is very smooth. It's very different than what we've seen with other robotics. I think these are getting more advanced, and we know with the future, what the future has in store for robotics, that's for sure. Look, if you haven't already, you got to sign up for the Insiders. The Insiders is my way to get to you directly. That's the way, because quite frankly, I've looked at the analytics, I've seen it, the channel has completely flatlined. The only way to get around this is for people to sign up to the Insiders and get it through there. If the channel basically gets some external traffic, hopefully we can reprogram the algorithm this way, but we're definitely struggling. I need your help. Sign up to the Insiders for free, either at this card up here or at themoneygps.com, and you will get my video of the day 5 days a week. Thank you for that. And if you haven't already, hit that thumbs up button. I do appreciate the support. Thank you very much. If you haven't seen this video already, you definitely want to check it out. It's right here. Click it and I'll see you there.